You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 28th day of April, 2023. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We're going to do things a little different today. I normally go into how many broadcasts we do and how to join all the broadcasts. So if you're new and you don't know any of that, just listen to yesterday's broadcast. The reason I'm kind of speeding things up is we had a request earlier in the week from one of our members. Hey, when's Garrett coming back on? Well, guess what? Today's the day. He will join us 15 minutes into the broadcast. He will spend 30 minutes with us. And then 45 minutes into the broadcast, Michael will come on and do a recap of what happened in the live training room this morning. Then we'll trade for 30 minutes live on the TradingView platform. And then I will do a recap of the Logic 247 alerts and the concierge trade alerts. So I'm just kind of pushing all of that aside so we still have time to open with a word of prayer, as we do every day. Now, our topic has been for about a week, or this week, my story, your glory. Our scripture is Matthew 6:33, and I'm sharing with you from the Message translation. If God gives such attention to the appearance of wildflowers, most of which are never even seen, don't you think he'll attend to you, take pride in you, do his best for you? What I'm trying to do here is to get you to relax, to not be so preoccupied with getting, so that you can respond to God's giving. People who don't know God and the way he works fuss over these things. But you know, both God and how he works. Steep your life in God reality, God initiative, God provisions. Don't worry about missing out. You'll find all your everyday human concerns will be met. And again, that's Matthew 6:33. So the title for this whole topic, My Story or Glory, today we're going to drill down to my schedule, your glory. I've heard different variations of this quote, but they all ring true. Show me where you spend your time, and I'll tell you what is most important to you. Yeah, I've heard that said about a person's checkbook. You know, where you spend your most money, where you where your treasure is. Yeah, that's where your heart is. Okay. These words can sting a bit, but what a great reminder that we can talk all day long about what matters most to us. But if that talk doesn't align with our actions, well, it's simply not true. I could tell you that no one matters more to me than my wife and kids. But if my schedule shows I've spent 0 time with them this week, then how can that be true? Did you know it's said that the average father in America spends 7 minutes a day talking to his children? Now, society's changed a lot, but, go back 75, 80, 100 years, people lived on the farm, and the son followed the father from sun up to sundown, learning how to do whatever it was that the father did. And there was lots of questions and lots of discussion and answers, and we don't have that anymore. We've taken that away. And there are those organizations out there, and you know who they are, that want to destroy the nuclear family. I beg you, don't let that happen in your household. I've been thinking a lot about how to be more efficient with my time, how to accomplish more, waste less time. The internet is full of life hacks. A life hack is a way to be more efficient with your time. I remember an old Seinfeld episode when Kramer's life hack was to install a garbage disposal in his shower so he could make a salad while he bathed. That's one life hack I probably won't try. Now, here's a life hack that is worth trying. Take an honest look at your schedule. Does what you spend the bulk of your time on align with what you would tell someone matters most to you if they asked? If not, there may be some things you need to hack out of your life. See what I did there? When I tell people that Jesus is my everything, but then I'm too busy to spend even 5 minutes reading his word, then my words are empty. Jesus' schedule always gave God glory. Scripture shows he always made time to pray. You can read about that in Matthew 14:23. I want to follow Jesus' example. If I want my story to give God glory, then my schedule needs to give God glory. By participating in this devotion with us each day, you are scheduling time to give God glory. With the rest of your quiet time, ask God to show you ways you can tweak your schedule to reflect better your desire to give Him glory. Then take the bold step of hacking the lesser things out of your life to better focus on the things that matter most. No one on their deathbed ever said, I wish I had spent more time at the office. It's a sad thought, but true. Join me in a word of prayer. Heavenly Father, as we come before you today, we are reminded of your words in Matthew 6:33, where you instruct us to seek first your kingdom and your righteousness. We confess that too often we get caught up in the cares of this world and forget to prioritize our relationship with you. We become anxious about our daily needs and desires rather than just trusting in your provision and seeking to align our lives with your will. But we know that when we seek your kingdom and your righteousness above all else, everything else will fall into place. Help us to trust in your wisdom and to seek your will in all things. Give us the grace to put aside our own selfish ambitions and to submit ourselves fully to your plan for our life. May we seek you with our whole hearts, and may our thoughts and actions be guided by your love and grace. We ask for your forgiveness for the times when we have strayed from your path, and we pray that you will continue to draw us closer to you each and every day. It's in Jesus' name we believe and pray. And everybody said, Amen. Okay. Let me check and see if Garrett has arrived. Yeah, we're still a few minutes. Let me just look real quick. Okay. He's not here yet, but he'll be here momentarily. So let me give you the numbers from around the world. Start here in the U.S. with the cash markets, the indices, as they're called. Currently, the Dow is up 226 points. The NASDAQ is up 38. S&P 500 up 25. And the Russell 2000, our man in the street, up 18 points. That's a little over 1%. In the commodity basket, crude oil up $1.86, trading 76.61 last. That's a gain of 2.5%. Gold's up 90 cents, trading 2,020 last. Silver up 12 cents, trading 25.11 last. In the Asian markets at the close, the Nikkei up 398 points, 1.5%. The Shanghai up 37, 1.25%. The Hang Seng up 54. So that gave us a green day in Asia. The FTSE up 39, DAX up 121, CAC up 7. So we had a green day in the UK. And so far it is a big green Radio Friday here in the US of A. Now, again, Garrett's going to come on. We're going to chat with him, maybe look at his charts. And Michael's going to give us a recap of the live training room. And we're going to trade live 30 minutes on the TradingView platform. And then I'm going to do a recap of the Logic 247 alerts and the Concierge Trade alerts, as I do each and every day. I'm just looking to see if Garrett's popped in yet. Okay, I don't see him yet, so let's do this real quick. Logic 247. That's our 24/7 around-the-clock E-mini alert service. We're in week 247 of Logic 247. That's only going to happen once, I guess. Now, since we rolled out Logic 247 247 weeks ago, we've issued over 13,900 individual handcrafted alerts. Every one of them a trend trade as defined by the 30-minute chart, price, and the BBC. This recap was done this morning at 7 a.m. Eastern. There have been changes since this recap was done. Some of the alerts we were waiting on have triggered, and I've issued some additional alerts. So this afternoon, Valerie will finalize the week as far as the recap goes. I think it'll end up a little better than it is, although there's nothing wrong with it now. As of 7 a.m., 53 alerts since the market opened Sunday night at 6 p.m. Eastern. 10 of those never triggered. At 7 a.m., we were still waiting on 8. I do believe a number of those triggered and filled. So we had 35 actionable alerts, of which 7, or 20%, would have been stopped out based on not risking more than $300 per contract, per trade, less when possible, based on market structure and a very simple 3-step process that we teach all of our lifetime members in their unlimited one-on-one mentoring sessions. Now, over the last 247 weeks, we've averaged 20% or less of the alerts being stopped out based on that risk profile. But keep this in mind. You never want to risk more on a trade than what the potential profit is. Now, you can simply look at an alert, whether it's a long or a short alert, and from the entry to the final trade to target, that shows you what the potential profit is in the trade. However, the maximum we want to risk on any one trade is $300 per contract. And if your plan is to enter at the entry point in the alert, but you're not going to stick around for the second target or the third target or the final target, if you're going to get out at the initial target, okay, which is designed to give you your goal for the day, then you really shouldn't risk more than that. Okay? All right. I just got a text from Garrett. He's trying to get logged in. Let's see if he's here yet. Okay. He's still trying to get in. All right. So here's where we stand as of 7 a.m. this morning. Again, this afternoon, Valerie will recap the entire week, and it will include any of the alerts that triggered today and any new alerts that were issued today. So while we have the time, waiting on Garrett, let me show you the Logic 247 alerts. That's our original alert service. It's different than the Logic alerts in a couple of ways. Logic alerts can come out around the clock, 24/7, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. So a Logic alert can come out whenever opportunity presents. Now, the CTAs are published as a static report shortly after the Globex opened each evening. Now, I did real good all week, 6:15, 6:35. But last night was a workshop and I had to get some work done. And so anyway, they came out at 8:30. So every member and every free trial member had these price targets, 8:30 p.m. Eastern. Okay. So what do you do with these numbers when they're published? Well, number one, just focus on whatever markets you actually trade. We'll use the ES as an example. First thing you would do is make note of where price is at this time. It's always going to be between these two numbers. Okay. Then draw a line in the sand at the long target, a line in the sand at the short target. That will help to keep you on the right side of the street. If price gets above the 30-minute BBC, it's trying to reach the long target. Price gets below the 30-minute BBC, it's attempting to reach the short target. It's that simple. Now, You still have to look left to spot potential obstacles, which could be previous swing highs or swing lows, which may act as support or resistance. And of course, you have to pay attention to the weekly zones, because when price drops to a zone, we expect support. When it rallies up to a zone, we expect resistance. Once you understand the importance of the zones and how to use them, they'll become one of the most important tools in your trading toolbox. We've published the zones for our members every week since December 14th of 2009. They come out Monday morning, 6:15 a.m. Eastern, and once published, they don't change for the entire week. Now, because this broadcast is open to the public, there will be those watching this video. They're either watching live now or maybe going to watch after the fact. But you didn't have these numbers last night. So if you want to grab a screenshot, you can. Because before we're all done. Okay, Garrett just arrived. Perfect timing. Let me get his mic open. And we'll get down to business. Okay. Your mic is open. Welcome to the show.
Good morning.
How are you, buddy?
Good, thanks. How are you?
Great. You want me to make you the presenter?
Sure.
Okay. Here we go.
Yeah, let me get up. There we go.
All right. I can see that chart.
Okay, let me run up here, and I'm just gonna pull something over here on the screen. That's fine. What I thought I'd start with here is what I call my primary trend indicators. Am I coming through okay volume-wise?
Yep. Volume, you sound well. Video is perfect.
What we have here is monthly, weekly, and daily. This is primary trend indicators for each. And it's kind of interesting where it is. The monthly, of course, is the big picture. And it had come down with my fast part of my indicator here coming down and breaking through and being bearish. And it had kind of remained underneath the yellow line until recently, and it's come through. So that's clearly bullish at this point in time. Now the weekly, of course, and again, this crossover here is early in the year. The weekly, it made its crossover coming out of that October low, and turned bullish right here, and has remained that way. Now, and it's had its ups and downs, but it's been clearly in an upward channel. And those of us that are familiar with Elliott wave immediately see a possible pattern here as a 1, 2, 3, 4, 5, which would say we're probably ready for
topping out, or maybe you're going to say something else.
Well, everything's up here, so not yet, but it looks like, if this is a 1, 2, 3, 4, 5, which it appears to be. I mean, it could be a 1, 2, 1, 2, and then in a wave 3 that just takes off. But that's kind of got to prove itself. So up until that point, I think we want to assume it's a 1, 2, 3, 4. We're in a wave 5. Everything's going up. So, we're not, again, this is a weekly chart, but, we have to
keep in mind, guys, this what you're looking at is the cash index. When you're looking at my charts every day, you're looking at the actual futures, but everything is based on the index, and that's what Garrett is showing you right now. You can't trade the actual index. You've got to trade a derivative like futures or options or whatever. So please go ahead.
Yeah, and but that's a good point. The key is they're all based on these charts here, and they'll do whatever they want. But if I had a monthly and a weekly futures, they'll look fairly similar to
Yes,
this.
they will.
It can change on the daily a little bit just because of current the current emotion. This is the daily. So here we are. Now looking at a bottom over here, and we've come up and we got a sell signal here and a correction, and we're back on the upside from this low over here in early March. And again, if we look at this, we can do a 1 2 3 4 5 for a wave 3, a wave 4, and again, everything's bullish, everything's going up, but this now really looks like a wave 5. So to me, that says, well, let's keep that in mind. I mean, we're on a buy signal. We should be mentally positive on this thing, but we may be getting to a point here fairly soon where this could be changing and we could be moving to the downside. Now, let's see. I've got to figure out how to... okay. Now, this is a daily chart. So since we were talking about the daily, let's look at this and see if we can get a little clearer picture on the short term. And we have let's get the dates in here so we know where we are. We get our October low. And we've got our, 1, 2, 3, ABC, 4, 5 waves up. Or if we want to break that down and make that a 3 and this a 4 and that a 5, but whatever, we're finishing off, and these are the sell signals from below here. So you've got a correction down here, and that's kind of what we saw on the other chart, where you're coming up, you got to come down to a low, we rally back up, and come back down. Here, it looks pretty much like a 5-wave decline, pretty clearly. So, I mean, you could say that's a bunch of ABCs, but, it almost looks like a 5-wave decline. But be that as it may, it bottomed here in early March, as we talked about. So what's going on now? Well, we've got what looks like, just if you squint at it, a 1, 2, 3, 4. And it looks like we're setting up a divergence here. Now, if this thing just keeps going, this can keep going too. But if we run into... This is kind of a bigger picture here. We've got this, low to low paralleled off here, and this is probably up there at, 4,200 or something. So this says, if it wants to fulfill this channel, we can get up there. And on a shorter term version, if we connect these lows and parallel this off, you're still, what is it, roughly halfway through that channel. So it says, this number up here, whether we get there or not, it says we certainly could. But if we take a look at the tops in here, coming across and draw that trend line in, and if we want to try to find a channel, the logical place is to go back to the low before this, and lo and behold, that meets with this low over here. So all of a sudden, well, this is big picture here, and this is bigger picture. Right in here, we've got ourselves kind of a current channel, and if this is if we're not getting as much buying here as we did over here, and that's clearly the case, maybe we go up to the top of this here, and we're not too far away of what may turn out to be a top. So all that says is everything's all go at the moment on the upside, but the party could be coming to an end here, and we have to be aware of that. That may set up as an opportunity. What does this look like on a weekly chart? What's the possible wave count? Unless it's something else. But if we assume this as this is our all-time high, and the real question is this a correction within an ongoing bull market, or have we started a bear market here, and we've got ourselves 1, 2, 3, 4, 5 waves down for a wave 1. We've got a wave A up here, an ABC for an A, a B, an ABC for a C, for a larger B, and now we're doing this C wave. And what do we have? We've got these 2 lows here as very significant lows. Why are they significant? Well, because you took a heck of a move down to get to this one, and another heck of a move down to get to this one. So for the time being, these are pretty significant lows. And if we use this as our basis for a trend line for drawing in a channel, and we parallel this off the all-time high, this is what we're looking at. And this, whether we call it a bull market or a bear market or whatever we want to call it, nobody can argue the fact that this is the channel. We're in a down channel. Where are we? We're in the upper part of that down channel.
We've been in a downtrend over a year.
Yeah, over a year. So, I mean, until proven otherwise, which would mean a breakout, a correction back to the line, and then a very robust up move. Until that happens, we got ourselves a bear market.
Yep. So far in the bear market, what about these red lines? What are these lines that you've got drawn in here? What are you doing? So if we concentrate on this channel here, the dark blue channel, these lines here are just parallel lines to these 2 channel lines. The first one goes back here to this high, and that line is the above line here, and the second one goes back to the April high. Let's see if we can. Well, if we get that in there, you can't see the rest of it. So anyway, that's the April high. And if we and that goes down here, and look what that's done. It stopped the advance here at the high last week. And so far, we're bumping up against it, but haven't broken through it. Now we can break through it. We've still got this red line above it. So we've got a pretty good little band of resistance right there. Yes.
If we get through that, we probably go up to this line. What is this line? I forget. I think it's the 50%. I'm just kidding. This is a 50% retracement line. I should have typed that in and put it in over here. But frequently, as you well know, on big corrective moves for wave 2s, frequently you go up somewhere in between the 50% retracement, and this other brown line here is the 61.8% retracement. So sometimes you just go up to the 50% retracement and turn around. But there's a lot of times I'll see moves that go in between the 50% and the 618. And that's exactly where our downtrend line is here. It's right in between. These horizontal lines come off a low here, and you come through, and here's a low here. So these are price levels that have kind of stopped the market here. So like these red bands here, this is resistance. And then these 2 horizontal bands right here, here's a gap, and here's a high on this lower line. And if you go back on this, you'll see that prices has kind of been stopped around it. So there's a resistance band, not only in those red lines that are falling, but also in the horizontal dashed brown lines there. So there's plenty of resistance right there. Whether it's going to stop this market or not, we'll see. But as we've seen on the daily chart, we're at a point now where we ought to be saying, gee, let's, we've potentially got some risk here. Everybody who practices Elliott wave, I always say if you get 10 Elliott wave people in a room together, no matter how good and how long they've been tenured in Elliott wave, they may all have a different count. So, but that's okay. I mean, what I try to do, what the real long-term Elliott wave aficionados do is when they can't figure it out, they want to break out a magnifying glass and break it down to the most finite thing that they can see. And that's fine. And if that works for them, then that's a great thing to do. Me, on the other hand,
I go in
when
the
I
other
can't,
direction. Yeah.
yeah, when I can't figure it out, I walk back a couple of paces from the chart and squint.
Mm-hmm. Mm-hmm.
and try to see rather than breaking down something that's minute. I'm trying to take a look at the bigger picture and see if I can see something just as kind of a big picture vibration. And that's what I'm trying to do here when I'm labeling this. So anybody can come out and have a different count than this, but the point on this one is that it's fairly reasonable. Whether it's right or not, time will tell. But at the very least, it's a very reasonable situation right now. Now, bullish people will count this as a wave 4 and say this is a 1, 2, 1, 2, and we're in wave 3 of 3 to the upside, and they may be right. I can clearly see that, so I'm not going to argue that that's not the count. What I'm going to do is take a look at that channel that we had. It's been a bear market channel for over a year, and say, well, let's roll with that until it's proven otherwise. And if that's the case, you've got this 1, 2, 3, 4, 5 wave down into October. Everybody's pretty much into that. And let's just call that wave 1 down. And then we've got 1, 2, 3, 4, 5 waves up for an A, got an ABC for a smaller A, which would be the way I count it. And you go up to a B wave here and a C wave down here for a bigger wave B. And now what you're looking for is a 5 wave C wave. So, gosh, is there anything that makes that look potentially reasonable? Well, there's 1, 2, and then a broken down 1, 2, 3, 4, 5 for a 3 and a 4, and we're in the 5th wave. So, as far as I'm concerned, that's pretty reasonable.
And if you were to draw fibs from that October 13th low up to that February 2nd high, which is what it is on the futures chart, and then if you look 3 sessions back, that was the 24% fib retracement from the October 13th low to the February 2nd high. So we're bouncing. This bounce we've had for the last 3 days has to do with on the daily chart, because institutional traders are looking at daily, weekly, and monthly charts the way us retail traders tend to look at 30-minute charts, 5-minute charts, tick charts, range charts because of account size. So we're experiencing the bounce we anticipated. The question we have is this bounce going to turn into a reversal?
Yes, and it's interesting. Let me see what I have after this. If there's, I'll get to that. While we're looking at this, and let's go to the weekly chart, because this is the big picture. One of the things that started this current rally from here is that there was you probably saw the article, I think it was a couple of weeks ago, and it was about hedge funds. And it was saying that the hedge funds are really short. And I was talking to one guy in particular, but mentioned it to quite a few. And I said, the hedge funds are really short. And I said, that makes me uncomfortable, because if you take a look at, if you go back to, well, let me see if I've got it on this chart. I think I do. Yeah, if you come back here in 2020, to the March low that started this run here. Well,
the Trump rally.
That was a very odd time. And it just, this is an enormous rally. Now, before this, we have remember that guy, Donald Trump? You had Trump's high over here. Now, gee gosh, whether we like him or not, obviously that name's going to offend some people, but the guy had the border closed and was working on securing that border and doing a great job. He had, you didn't have people running over and burning down the country. I mean, he put a stop to a lot of things. He had the pipeline open, gas prices were low. He had other nations respecting America.
Yes.
Because he says you're going to pay your fair share. We're not footing the bill for you anymore.
That's all gone now.
And that's all gone. So, but the point is, when the good things were happening that were good for the country, we had a good, strong bull market, and then COVID came in. And then, of course, we had, and then COVID, what happened? They shut down America.
Mm-hmm.
I mean, if you think about it, forget the politics. What happened? Somehow, the backbone of America, which used to be the individual businessman.
Right. Small businesses.
Remember, back when things were free, it was the individual man who was the champion of the country. I mean, this the individual businessman. And come to America, the land of freedom. Start your own business. It's we allow that here, and we encourage it. But that's all changed. What happened here is the powers that be, whoever they might be, actually shut down America with COVID. And there wasn't any reason to do that.
And shape-shifting Fauci says he didn't do it. I never closed a school. I never closed a business. I mean, the news clips of him saying that are just, it's classic comedy. Because we all heard what he said, and
well, what's happening is we are having our intelligence insulted, and the scariest part of that is, the other side of that coin. Having your, obviously, when somebody lies to your face, and we get many now it's fake news. They always twist that around. But the bottom line is, are we being lied to or not? And the answer is daily. Of course we are. So that being the case, the question, I guess, are we having our intelligence insulted, or are we having our intelligence properly evaluated? Because the other side of that is, if you're getting lied to and you're buying into it, then apparently you're not smart enough to see the lie. And that's a scary thing for the country at large. And there's a lot of division going on. I'm old enough to remember we had a saying in the country a long time ago: united we stand, divided we fall.
Right.
And the bottom line is, if you're in a war, forget whether it's America or, it doesn't matter. If you're in a war, the way you go in and win that war is you break down the society from the inside. You make that society weak and you divide them. Then they're a lot easier to conquer. When they're all united and they're all patriotic, you got a problem, man.
A house divided shall not stand.
Yeah, this is why back in the 1960s, when we even got warnings from Eisenhower and JFK that maybe somebody else was in charge, at least they couldn't overtly take over the country, because both Democrats and Republicans were conservatives. And conservatives tend to be patriotic for the country, for the Constitution. They don't want to change everything. It's working well, why break it? We've got, back then we were number one in the world. It took the next 10 countries' combined GDPs to match ours. Why would you want to change anything? Why would we want to be progressive when everything we're doing is working out to everybody, pretty much to everybody's advantage? And the rest of the world had held America in high esteem. We're not held in high esteem anymore. We've got the BRICS nations wanting to do another monetary thing.
We've become a laughing stock on the world stage.
There we go. I'm sorry. Excuse me, Dwayne. I missed what you said.
I just said we've become a laughing stock on the world stage.
We really have, and I think both parties can are responsible for that. We've gone away. I mean, the interesting thing is nobody's following. Shouldn't say nobody, but darn near nobody is following their oath of office. It's like you put your hand in the Bible and say something, and you're thinking of the baseball game or something. You know, you're not. Nobody, very, very few are following their oath of office. And we're just, the interesting thing about this is, to somebody who is a historian of these type of things, like the long wave cycle, it shouldn't come as a surprise, because, you know, we've talked about it many times. You know, we're not trying to make a political statement here. We're making an observation, and the simple observation is America is no different than any other country that's been in a power position before on this planet. At some point, there's corruption at the top, there's an overthrow, and they go from being great and strong to something less than that. And right. We've clearly defined that trend, and maybe, just maybe, the American empire is over, and maybe it's not going to return for a long time, and that pleasure goes to somebody else, be it China or, you know, whoever else is in line. That's the way things work on this planet. And the only thing that makes it different is something we've brought up many times before, and that is we the people who are living within this great American empire, which is what it has been, we're the last to see it. And the reason for that's pretty simple. We've grown up through our entire lives where we've been in that position of leadership. And when you don't know anything else, people become entitled. And that's normal. In other
Garrett,
words, if we've had freedom, and we've had freedom for a long time, well, gosh, this is a free country.
Yeah.
And people forget that you have to fight for freedom. Yeah. It's not going to stay there. There's always somebody who wants to remove your freedom so that they have power and control over you.
Freedom is never free.
I don't think it's the Republicans, and I don't think it's the Democrats. But what happens is that one of the parties, and it doesn't matter whether it's America with Republicans and Democrats or Whigs and Tories in Great Britain. It doesn't matter. Generally, there's two parties. And one of those two parties will be influenced by the controlling party. I mean, even when America started, back in Great Britain, or merry old England as it was, when the founding fathers wanted to leave the country because of all the injustice and taxation without representation and those type of things that drive people away. It was the same then.
Yep. Garrett, we've run out of time for this segment. We got to switch gears so that Michael can do the recap, and then we're going to trade live on the TradingView platform. Then I'm going to do my recap. Can you come back one day next week and let's pick up right here where we left off?
Yeah, I had some interesting things to show on the precious metals and so forth. But that'll hold. Well, and
yeah, let's. If Monday's good, Tuesday, you let me know what day's good, and we'll do it.
Oh, sure. Monday or Tuesday would be great for me. So let me know when it looks good, and we'll make that happen.
All right, brother. Hey, have a great
thanks
weekend.
So much, Dwayne.
Give my best to your family.
Your audience.
Talk to you soon.
Okay.
Michael, you ready?
I am ready.
All right, buddy.
Ready? You bring it over here. In the wings. Here we go. All right.
Okay. Looks good.
There. Okay, let me get one more thing going over here on this side. Just get it ready in case I run over on this. I don't want to not be able to get to what I just created here. Make sure. Let me hit refresh on this and make sure I did actually create it.
While he's doing that, guys, when we go to the charts, after we trade on the TradingView platform, I'm going to tie in some of what Garrett showed you on the index with how we read the futures chart. Very similar, but a little different. Okay, it's all yours.
Okay, here we go. Good afternoon, everyone. Today is Friday, the 28th day of April, the last day of April 2023. Right now, a third of the way through the year. All right. So if you have not taken a free trial with us and you want to take a free trial, go here to mytradingiq.com. Right here it says sign up for free 5-day training, 9:30 to 11:30. Click on that. Now, once you have clicked on that, you should go here to the trading platforms and download the trading platform of your choice. All right. If you already have DT Pro, that's great. If you already have Ninja, that's great. If you don't and you want to download one of them, that's great. You should definitely sign up for TradingView as well. You can sign up for 30 days free on TradingView. If you can get that, that would be great, because that's pretty much what I'm going to be talking about right now. Right, all the stuff that I'm going through right now, the latest things that we've created are on TradingView. All right, so let's get to the spreadsheet now. If you are going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 28th day of April, 2023. Made 89 ticks on the NQ, 28 ticks in crude. We lost 20 ticks on the gold, and we made 5 ticks on the ES. That put us at plus 587 per contract this morning. And today, with 4 contracts on, because we're in the 4th month, Monday we'll be putting 5 contracts on because it'll be the 5th month. With 4 contracts on, we ended up with 11 minutes and 4 trades today to get to $640. Today it took 27 trades today. We took 27 trades, so we did a lot of trading today. On the month now, we're at $8,892. That's over 19 trading days, averaging $468 per contract per 2-hour trading day. On the year, we've gotten our goal in 79 out of 81 days, and we've gone 6 days now since our last non-green day, 6 business days. We've gone 428 business days since our last red day, and that puts us on the year at $41,045 over 81 business days, averaging $506 per contract per 2-hour business day. Now, if you were to quit trading when you get your goal for the day, and you were to add 1 contract per month, I don't know what this number is over here. And you were to add 1 contract per month. So far this year, you would have only had to work 20.83 hours, and you would have averaged $1,372 per hour on the year. Okay, now that again is not to say that you're going to sit down and work for an hour and make $1,372, though I believe, you would do better than that probably if you were to sit down with 4 contracts on. Today, for instance, with 4 contracts on, we made $640. But so far on the month, we're just about 6 hours into the month. All right, 6 hours of trading this month, and we are at $11,560 with 6 hours. So we're just about $2,000 an hour right now on the month. All right, let's get into the trades. All right, gold was our nemesis today. Again, it was our nemesis yesterday too, I think, right? Wasn't it? Actually, we didn't have a nemesis yesterday, but it was the day before. Crude was the day before, I think. Anyway, on gold today, we had a couple of stop outs, and that put us at minus 20. Wait, where's the gold? There it is. Yeah, let's put that down in minus 20. Yeah. My pen just stopped working. There it goes. Minus 20. All right. So on gold, we started out over here, right? Our first trade was right in here. We ended up stopping out minus 10 ticks on that. Well, this was the first one. We ended up with a break even. Then we had a minus 10 right there. Another break even trade right here. Another break even trade here. And right at the end, we had another minus 10 right there. That put us at minus 20 overall on gold. And since then, you can see it's flattened right out. Not a lot of trading going on. We really didn't have a ton of opportunities today in gold. You know, normally we get some pretty good opportunity. I skipped that one. I wish I would have gotten a piece of that, but I didn't. But that was it on gold. We really didn't have a ton of opportunity, even since the break. We still haven't had a lot of opportunity. The crude oil, we had some pretty nice moves in crude today. I just didn't get a chance to get into them. Most of them. We did actually have some decent trades, but we'll go all the way back here. Our very first trade on crude, we were right here. We stopped out minus 10 ticks. So we're operating with minus 10 ticks for a little while today on the crude and on the gold. But the crude, we were able to get it back after a little while. We ended up going from minus 10 Here we picked up 2 ticks to get us to -8. And then we picked up 12 ticks to get us to +4. And then we picked up right here, we picked up 12 ticks to get -4, then 8 ticks to get us to 12 ticks to get us to +4, then 8 ticks here to get us to +12. And then over here, 16 ticks to get us to +28. We ended up taking a break even on this one, and that was it. So the crude ended up giving us some nice trades right through here. There's some nice trading opportunities. We didn't get that one, but we did get that one and that one. Some nice trades. There were no other trades through here on crude. At the end of the session, it got pretty flat for a half hour right there. Came out of that and gave a trade right here. Now this would have been break even to a little bit of profit. You wouldn't have done the second one, and you'd be looking at this one right now. You could take this. The long-term trend is not that bearish, but you could take this anticipating a move down here to 76.37. And if you look at the DOM right now, we'll see if that supports that move down to 76.37. It does actually. It supports a move down to 76.32. Okay, the DOM is actually suggesting it's going to go down here. So when you look at the rules in here, if you go to mytradingiq.com, you go to trade rules, there are 3 different steps to every trade, right? You have the entry, the risk management, the exit. When looking at the exit, step 1 is to look for the prior swing high or low. That would be this level right here, right? That's what I was saying, the 76.37. And then step 2, learn to read the DOM to find potential numbers. I did that for you, and the potential number on that is 76.32. Okay, so if you're in this trade, what you'd be anticipating is a move down here, trail your stop, a move down here. Right, at that point, the black line should be all the way down here, and the green line possibly all the way down here as well. Okay. Anyway, that was it for crude oil today. We'll see where that one goes. On the ES, we were back and forth on the ES a little bit today. Out of the 27 trades we took this morning, 6 of them stopped out. So we did have a fair amount of stop outs, but we still ended up nice and green. My very first trade on the ES was right here. We picked up 2 takes on that. I missed that one, grabbed 8 more takes on this to get us to +10. 4 takes on this to get us to +14. Then I stopped out right here to put me back down to 4. Then right here, I went from 4 to 5. So I got 1 tick here, get me to +5. And this is during the break. There was a nice trade there, and this one was not a nice trade. This one would have stopped you out. But all 3 of those would have been easy to take. Now, remember, you're not going to try to take every single trade. You're just in there to get your goal for the day and then stop trading. So you could have gotten your goal for the day. A combination of any one of these would have gotten your goal for the day. Even if you add in the stop out, that and any 3 of these would have gotten your goal for the day. Right here, though, it's put in a higher swing here, came back down, hit the ribbon, gave an up close. So you'd be looking for another potential long right in here. It didn't actually give one because it didn't go into the overbought. But now it's got a higher swing, so if it pulls back down, you look for it to go back up. Okay, it's 12:50. I can be quick now. Just realized. The crude oil, remember the number that I said? This is the first one, and this is the second one, down here to 76.32. We do have the next session that's going to be coming up here in a few minutes. That is through TradingView. If you go to tradingview.com, then you go to community and live streams. You'll see us in there. Okay, so now on the NQ today, we had, let's scroll back. We had a bunch of trades on the NQ, a couple of 30-tick wins and 1 20-tick stop, I think, maybe 2 20-tick stops. Even this is taking a long time. Okay, I don't know that I'm going to have enough time to go through the whole NQ because we're going to start up the next session. But I'll just tell you how it went with the NQ. We had a whole bunch of trades. We had 14 trades on the NQ, I think. We had a +1, another +1 to get us to 2, another +30 is where we got the goal for the day to get us to 32. Then a +4 to get us to 36. Then a +8 to get us to 44. Then a +16 to get us to 60. Then a +30 to get us to 90, a +1 to get us to 91, a +8 to get us to 99, a -20 to get us down to 79, a +30 to get us to 109, and then a -20 to end at 89. Those were the trades that we had with the NQ today. So we stopped out a couple of times, but we had 2 or 3 30-tick gains in there. 2, I think, 30-tick gains. 2 20-tick stop outs, 2 30-tick gains, and then some pretty good other trades as well, 8 to 16-tick trades a few times in there. So the NQ was plenty active today, and you can see right here, it's just giving more right here. I am about to start the live stream and trade some more on the NQ and on the ES. So if you guys just hang out for a minute, we'll jump into that live stream right now. If you've not taken a free trial with us, all you have to do is go here to the homepage at mytradingiq.com. Go to the homepage at mytradingiq.com and sign up for the free trial right there. Now, give me just a moment. I'm going to come over here and hit refresh on this and start the live stream. If you want to jump into the live stream, hold on, it's hanging up on me here. If you want to jump into the live stream, you can do that by going here to, actually it's not here, you go to tradingview.com. Here, go to tradingview.com, and then right in here, go to community live streams, and you'll find us in there in live trading right now. Okay, now let me go back into here. It wasn't there, it wasn't here, it wasn't here, it was here. Okay, that's what you will find us in. All right, so that said, let me start the live stream. Here we go. The live stream is about to begin right now. All right, so now we've begun the live stream. If anybody has any questions, again, the crude target that I gave you in here, you just nailed that. Thanks, John. And that, again, is all stuff that you'll learn how to do if you take the free trial with us. Right, if you haven't taken a free trial, go to mytradingiq.com. If you become a partner, you'll learn how to do that as well. If you become an active member, you'll learn how to do that as well. All right, so right here, we just went all the way down through that level, and we'll probably see it pull back up here. Dot at it is what I'm thinking. I don't know for sure, but we'll see. On the ES right now, we've pulled back down, tested the ribbon. We just need the up close there on the ES for that trade. Okay. If we get the up close and it pulls out of the ribbon, it would be an arrow off the ribbon. If we get the up close and it doesn't pull out of the ribbon, it's still going to be a trade because the black is in the green and we've hit the ribbon. We're coming off a higher swing. All right, so let me go through the rules here really quick for you. Trade rules for the entry. The rules for the entry without a slingshot. Black line in the ribbon must be on the bottom. It must come after a higher swing, and the long-term trend must be in favor. And we have all those things. Black is in the green. This is the higher swing. This is the long-term trend. Now, if this closes down, then we're probably not going to get that particular set of rules, but we might get the next set of rules. If this closes up, then we are going to get that set of rules. So we're looking for an up close on this bar right now. If we get an up close on this bar, then what I just described to you is the set of rules that we're going to execute by. Okay. We just need that up close. It hasn't happened yet. The NQ is starting to falter a little bit over here. The crude oil went through that target that I gave you. It went through the first one here and through the second one right there. Now, with third target on the crude, on the downside right now, this is where the reading the DOM part of it comes in. That'd be 76.14. 76.14. Okay. Right down to there. All right, and on the ES, if this does trigger, I don't really see any great targets on the upside right now. I do think it's going to trigger, and when it does, I don't really see any great targets on the ES right now. But so what you would look for, if you go back to the rules right here, number one, you got to get your risk management right. All right, so we got to get the stop to break even. But then look left for the prior swing high. Okay, the ES just triggered. Look left for the prior swing high, and then learn to read the dime. Learn to read the DOM is what I meant to say. The ES just triggered. We're in the ES trade right now. I had an order waiting there. Throw my stop at break even. So now, as far as the rules go, right, this is the target number, 85.75, right there. Now, I'm going to start locking in a little profit on this. 85.75, I like it actually one tick higher than that. at 86. All right, so as far as the rules go, let's just go back to the rules. We have 2 ticks locked in on the CS trade, so I know we're going to make at least 2 ticks, and it's possible it could go all the way up here and give us 5 points. Okay. The crude needs to pull back here. The NQ doesn't have a trade. The gold is not giving us anything here either, so I'm going to lock in a little bit more on the ES. There's +4. Plus, actually that's 9, +8. And so you see there are more targets opening up here on top now. So I'm going to extend that out a little bit. So now I'm going to draw a line there at 41.87 for you. Okay, 41.87. We just took 8 ticks in profit on that one, but I'm going to draw a line there at 41.87 for you. All right. Now we did not need to have the arrow on this trade. Remember, I was telling you we did not have the arrow because the black was in the green. So we took 8 ticks profit on this, and it should make it up to here, but 41.87 is the real number that should get up to right here. Okay, 41.87. We don't have trades on any of these other markets yet. All right, let me cancel the order I had waiting up there at 41.87 for right now, and let me also go over here and see if anybody's got any questions. If you are in here and you're on the live stream and you have any questions about anything, you want to see any of the symbols, or anybody wants to see any of the symbols, just type in the symbol. And I'll be happy to go over it with you. All right, so we're 6 minutes in, and so far we have 1 trade with 8 ticks profit on the ES. These other markets just aren't giving us anything right now. If we get a pullback here on the crude, we are looking to jump on that again. Going into Wednesday's, from Wednesday's lesson plan, leg length. Bam. Okay. From Wednesday's lesson plan and leg length. Look where that ends up, right there, at that next number down. Makes sense to you guys? All of you guys have been watching all week, following the lesson plans. This one right here, the swing high should be right here, right? And then beyond the swing high, you have that number right there. Now that's without looking at the weekly trading zones and stuff like that, because we've been nailing the weekly trading zones today too. This is something that Dwayne will get into, I'm sure, at some point. Right, the midpoint between the weekly trading zones is what I would be concerned with right now, and that level is right here at 41.94. Okay, 41.94. So what we anticipate here is a run up above this level right here, above this level. Okay, and when you get up above that level, up to this level at least, is what I would be thinking right now. Okay, and if we're doing leg lengths again, we'll do leg lengths this time on this one. We could do a smaller leg length like that, but let's just do a bigger one that encompasses a little bit more. Okay, so do that leg length, then up to here before you pull back, right? Now up to here before you pull back. It all looks pretty good, right? You guys following all that? Anybody who was in the trial this week, that was from the lesson plan. You should be able to assimilate that with what was gone over this week. All right. Yeah. So looking here, John said he will be there. Everything else is all good. Okay. All right, so the ES did not make it up to the swing high. So sadly, that means it's pulling back, but we're not going to have another trade entry on this. I mean, we were able to get 8 ticks out of that, which was good. And that's why you trail your stop. You want to get the most out of the trade. Okay, I probably could have gotten some more out of that, probably 12 ticks out of that if I wanted to, but I was giving it room to run. Over here on the end case, this is kind of an interesting spot that it's in right here, because this is where the high was before, and it sold off of that twice right now. It's kind of given another trade in that direction. It's not really trending the way I'd like to see it trend, but it's about to set up a long trade off the ribbon. It should make it up to the prior swing high. So it's a little more risk on this trade, I would think, given that it hasn't gone through this before. But if it gets up there, you're going to be 30 ticks into profit, so it would be okay anyway. This bar is got a low here of 74, 70, so 78, 75 is what you'd be buying. Right up here at 79. Right there is what you'd be buying on that. And with the NQ, I have everything automated. I stop to go to break even after it gets 8 ticks in profit. So it hasn't gone 8 ticks in there, it just did. And it bumped it to +1 tick. And I have a 30 tick target on this. So what I'm looking for is for it to get up to here at 87.75. My 30 ticks would get hit if it goes up and it hits that prior swing high. So right now I'm just going to lock in 1 point on the NQ. Okay, 1 point on the NQ, and we'll see if it makes it all the way up here to the prior swing high. If it does, it'll take me out at +30 ticks. Okay, so minute 0.75, and that's 12 ticks. $16 ticks. And it's probably going to take me out there at that number. 20. There it is, 30 ticks. Okay, and it made it to the prior swing high. So that was a pretty easy trade to take. Everybody should have been able to follow me through all of that. I pretty much described exactly what that was likely to do. I don't know if you guys all followed along with that, but I pretty much walked you through the whole thing. Thank you. If anybody has any questions about any of this stuff, just type them in. Any of the chat boxes, just type them in. Okay, I'm happy to answer your questions. Let me scroll up a little bit right here. I don't know if any of you guys who are actual partners follow me into that trade right there. That was a pretty easy one to do, right? This was easy. That was easy. Over here on the crude oil right now, we have a lower swing in place. So what do you anticipate? Pullback, right? How big was this pullback? This is from the lesson plan yesterday, right? The leg length on the pullback. Just about there, right? So we should get a push down. If we get a push down, it should finish this move down right here. Okay, so I'd be looking for that on the crude right now. It's got a high here of 49, subtract 8 from that. Okay. $76.49 minus 8, $76.41. I would sell $76.41 right now. Now, this is not in the overbought section yet, so it's not going to give you an arrow right here, right? But it would be a ribbon trade. It'd be a ribbon trade right there. Now, this just barely put in a higher swing, but it's still put in the higher swing, so it's going back, give you another shot at it. The ES hasn't finished its move up yet. It needs to get up above this swing high right here, right, to give us another trade. And gold is just not giving us anything. So it's 114 right now, guys, 114. And so far in this session, we've had one ES for 8 ticks and one NQ for 30. Okay. Okay, so we're pulling back, hitting the ribbon over here on the NQ. So we need the up close over there on the NQ now. All right, we're not going to have an arrow on this because we didn't get into the oversold, so there's not going to be an arrow. We need the up close on this bar right here would work. 80.50 up to 84.50. 80.50 up to 84.50. Okay, what was I looking at? Okay, I'm still looking at the same thing. 80.50 up to 84.50. It's going to be 84.75. 84.75. Sorry. Is it right? No, it's 80.25 up to 80.50. 80.25 up to 80.50 right now. That's what it would be. 84.50. I mean, there it is right there. 84.50. That's what I mean. That's what I mean. I'm trying to do the math in my head, but I'm actually on the crude trade right here too. So I'm not doing the math in my head exactly right. But here's the NQ trade. Here's the crude trade. Now the NQ trade needs to go 8 ticks in profit to bump the stop to break even. That is all automated, so it's going to do it by itself. Okay, when it hits right here, it should bump it for me. But it's going to hit right there first. There it is. It bumped it for me to break even plus a tick. On the crude, it is not automated. So that one just took me out with 1 tick on the NQ. The crude is not automated. That's going to go to 4 ticks in profit for me to bump the stop to break even. Okay, and then you guys may be wondering why I'm doing 4 contracts. It's because it's the month of April. I've been doing 4 contracts for the month of April. I just thought I'd do it all day today. There's 4 ticks, so stop to break even on the crude trade. We picked up 1 more tick over here on the NQ, and we're now break even on the crude so far. Okay. And so 2 NQ trades for 31 ticks. And we're waiting to see what happens with the crude. The crude should drop down to, the numbers are starting to open up a little bit. I'm going to lock in just a couple of ticks here, but I think once we get down below 32, we'll be looking for it to get down to here to begin with, 24. Okay, which is all the way down here. And then the other number that we had earlier was all the way down at 14. So I'm going to get 2 ticks, or I'm going to get a whole bunch more on the crude oil. The ES never finished making this move up here. Okay, it's still working on it. It could still give something else, but we're not going to be part of it until it does. And the crude, we're just going to have to wait. It is 1:17, so we only have about 13 minutes left in this session. I don't see anybody asking anything else yet. Does anybody want to see any other symbols or anything like that? You just have to let me know what you want to see. Okay. For right now, everything's working like it should right now. This trade worked out exactly like it should. This trade worked out, well, exactly like we thought it would. We're anticipating it's going to keep going, but we don't know that yet. The crude oil, we're going to get 2 ticks, or we're going to get something more than 2 ticks. We're not going to do another trade here on the NQ. This last one needed to put it in a higher swing. It hasn't done that, so we're going to hold off on that. And so we're just waiting. The gold is not giving us anything right now, but we still have 12 minutes left, so there's a chance it could. I'm going to lock in a little bit more here on the crude trade. I'm locking 4 ticks. So with 4 ticks like that, with 4 contracts on, that's $160 a contract I just locked in. Yeah, I'm sorry, $160 total, not per contract. It was $40 per contract, and it just took me up with $40 per contract. Okay, so let me write that down. Here we go. Let me do this, this, and now the NQ failed to put in a higher swing. The ES is probably going to fail with it right here. All right, that's what I'd anticipate. Now, again, if you're in here and you're on the live stream with TradingView, and you have not taken a free trial with us, if you want to take a free trial, now's a great time because you have your indicators activated over the weekend. You'll be able to check things out over the weekend. Just go to mytradingiq.com and sign up for the free trial right there. Okay. So if you're new to all this, if you go to mytradingiq.com, trade rules, these are the rules for TradingView right here. Okay. These are the rules. Everything that I've done so far in this session, in this half-hour session, or now 20-minute session, has followed all these rules: the entry, the risk management, and the exit. I've done everything right according to these rules. Long trade, with or without the slingshot, short trade with or without the slingshot. The risk management. Now this is critical, right? The risk management, that means getting the stop to break even, getting the risk off the trade. If you want to continue to persist and have this as a means of income, then you need to figure out how to manage your risk, what your risk management strategy is going to be. Okay, you have to have a risk management strategy. If you don't have a risk management strategy, you shouldn't trade at all. You should just wait until you figure out a risk management strategy. Trading demo until you have a risk management strategy. Okay. Yeah, we'll set you up with one to begin with, like this one right here. And you can adjust this as you learn to trade and as you become profitable. You can adjust this so you have your own risk management strategy that suits you in your trading. Okay, but for right now, that's a good starting point. We only have, well, now we have 9 minutes left. I don't see any other symbol requests in here, so we're just going to stick with the futures for right now. And we don't have any trades other than what we've got so far, than what we've done. So we had a tick there, I think, right? 30 ticks there, 8 ticks there, and 4 ticks here. So that is $40, 140 bucks, and this was 150, so it was 200. This was 155 actually. So it's $295 per contract we made in here. And because I have 4 contracts on, it's actually more than that. 295 times 4. So in this session so far, we've made $1,180 so far. Okay. And we're waiting, right? Waiting. All right, well, while we wait, I'll just show you this. This is how we're going to end the month of April. Per contract, we're up $8,892 per contract in the room this month, for the month of April. That's how we're ending it. On the year, with 1 contract, $41,045. That's where we are on the year. That is using TradingView charts, following the rules that we go over in here. These rules right here, 2 hours a day. Okay. That is just what we do. We've been doing this stuff for years and years. And we just wait for the trade setup to come, and then we take advantage of it. Over here on gold, you see it starting to move right here. Now the direction, the long-term direction was bullish, is changing to bearish. So we're going to need this to push through a little bit more and then pull back. And when it pulls back, it should separate this a little bit more. We need a deep pullback in there. We don't want to have a shallow pullback on the first trade after a trend change. Okay. All right. We don't have a trade here that we can do on the crude. This is going to go down and put in a lower swing first. It's going to get down below this level before it pulls back and gives us something else. This is looking better on the gold. I want to see this bar close down and then we'll get a pullback. Over here on the NQ, you see we failed in a higher swing on this last one over here. We failed to put in a higher swing on this last one over here. That's why we weren't thinking about taking any more trades in that direction. Same thing here with the ES. It's consolidating here, the ES and the NQ. So what we would normally do, what I will do right now, is look at them on a larger time frame. The ES, it was pushing up right here, and it's done going up right now. It looks like if it were to keep going up, I'd look for it to get up to here, but it looks like it's going to pull back down and test the ribbon BBC, which is right here at 41.77. The NQ has a weekly trading zone right up above here. It's got the high of the day and a weekly trading zone up above right here. It looks like that's pushing back as well right here. So we just, in the larger picture, the crude oil looks like it's going to drop down here to 76.15. How's that work out with what we've drawn in here? Perfect. Right here, 76.14 is what we drew in here. That's based on real numbers, reading the DOM. And this is based on a weekly trading zone. So I would really think the crude is going to go down, at least down to that level. And I don't know what the indexes are going to do. It's really kind of up in the air. Let's look at the gold, though. One more time at the gold on a larger time frame. The gold is bouncing off the weekly trading zone right here. So it's jammed up in between the MA1, which is this red blue line right here, and the weekly trading zone, which it just hit. So I don't expect the gold is going to go down more in here. You know, it's starting to show a little bit of a short trade here, but I don't think it's going to keep there. I don't think it's going to keep going in that direction. Yeah, 97.98. Thanks, Owen. That's what it is. 97.98 weekly trading zone. We went down and bounced off it right here. So that's in here, isn't it? No. Where was that thing to draw? No, it wasn't there. There. Wasn't there. Was it in here? No. No, tangle. Here it is. That's the weekly trading zone. Okay, so everything's all jammed up here. We only have a couple of minutes left, so I think we're probably going to end with what we have, which is +4 on crude, +8 on the ES, +31 on the NQ. Okay, so with the 4 contracts on like I did it, that's not too bad of a haul for 29 minutes. We end up with $1,180. It's a pretty good day's work. Pretty good half an hour's work on Friday. I really don't see us getting anything else. The NQ long-term direction is just flat. The ES is going to get up above this level to pull back enough to give us another trade. The crude is going to get down below this level to give us another trade. And the gold is going to pull back significantly to give us a trade. So we have about a minute and a half left. Gold is starting to pull back. The ES is starting to push up. The NQ is also starting to push up. So if the NQ to actually turn into something, it's going to have to get up above this level and spread the long-term direction out. So it'd have to be a significant move. Okay, I see that happening. All right, let me check over here and see if anybody's got any questions. Last minute, anything over there? Nope, nothing last minute on the live stream. All right, that's it, guys. I'm going to wrap it up with this live stream for Friday. We are going to end the way we have it. Let me just type in down here. If you've not taken a free trial with us, go to mytradingiq.com, sign up for the free trial there. We are ending with plus 31 NQ, plus 4 CL, and plus 8 ES. Have a great weekend. There. Okay. That is it. With that, I'm going to wrap it up for the morning session. I mean, not the morning session. I'm gonna wrap it up right here for the live stream, guys. So I'll send it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South America's largest city park. What I would look for here is continue to move up on this, continue to move up on this, continue to move down on this, and a pullback, and then a move down on this. But I don't think gold is actually going to move down. I think we're going to be all done with gold for the day, probably. That's it. I'm going to wrap up the live stream right about now. Okay, now we can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain America's largest city park. Dwayne, if you are ready. Excellent. Excellent.
Okie doke. The recap of the morning session.
Today, 11 minutes, 4 trades, $640.
Great job.
Thank you.
Okie doke. Now, guys, we looked at the logic alerts. We know where we stand there. We did that before Garrett came on. I also showed you the CTAs, but we didn't get to the charts yet. So we're going to go through each one of these markets. If you're not a member or a trial member, you can take a screenshot, right? So that you can follow along as we go through the markets. And remember, I said you draw a line in the sand here and a line in the sand here. And price is always between these two numbers at the time the report is posted. It's normally posted by, I try to get it done by 6:30, 30 minutes after the Globex open. Some days I get it out sooner. Last night, I got it out late. So, but that's okay, because as a member or a trial member, you're notified as soon as it comes out. When it comes out. Okay. So with that said, let's go to that daily chart. Been posing a question for a long time now. Was this a major head fake? Now my question, is this a head fake inside of a head fake? How will we know? If buyers keep buying, if buyers stay committed and we take out this high put in on April 18th, I'm going to suggest this is more than a bounce and possibly a reversal, which is a big thing to say because we've been in a downtrend now over a year. Reversals got to start somewhere. These fibs that you see on my screen embrace the October 13th low from last year to the February 2nd high put in this year. And we are at the high of the day, which, you know, just looking at that, you're like, oh, wow, that's got to be easy to trade. Actually, it can be difficult because every new tick is a new high of the day. And if you've been trading for any length of time, you know that when a new high of the day is put in, you know, by one tick, the market will often backstep 4, 5, 6 or more ticks, you know, enough to stop you out. And then it'll advance and it puts in another 1 or 2 tick higher high on the session. So you're constantly battling that wall, the high of the day. I'd like to see a nice deep pullback so that I could trade long into the close. But it is what it is. For those that are new, the green line's called the BBC, stands for Bull Bear Cross. When the price crosses above the green line, we're bullish and anticipate higher prices. When price crosses below the green line, we're bearish and we anticipate lower prices. Above, higher prices. Now, the other indicator, the red and blue one, it's the CFMA1. I refer to it as red and falling, blue and climbing. One bearish, the other bullish. Bullish until it gets directly above price. See, you want it running alongside price like this and like this. Okay. But when blue and climbing gets directly above price, then it potentially becomes resistance because it's on its way to perhaps turning into red and falling, which is bearish. Now, I've been questioning this whole move as a head fake for at least a couple weeks. Today has me flummoxed. You can look that up. We're off the high of the session. High of the session is 85.75. Our highest weekly zone for the week's way up at 42.15. Okay. Pull back to the BBC holds more often than it doesn't. Now we had a candle here that opened and closed below the BBC. So what happened? We hit the 24% fib retracement. Now we talked as we were coming down, we said, hey, once we hit that 24, institutional traders around the world are going to see that and the bounce will become a self-fulfilling prophecy. Even if you don't believe fibs are real, which by the way they are, it's part of the fabric of the universe, I heard a guy say once. Even if you say, fibs, that's a bunch of garbage, like some people say about LA waves, you know, I'm telling you, whether it's real or not, and I believe it is, there is an element of self-fulfilling prophecy. If you have enough deep pocket traders who believe that when price reaches a fib retracement level, there's going to be a bounce, what are they going to do? They're going to buy. And their buying does what? Creates the bounce. Big question, can we take out this high? If we do, then we got to deal with this high, this high, this high, and then the February 2nd high. Been in a downtrend over a year. The low put in October 13th of last year. The bounce off that low put in February 2nd of this year. Now this is a futures chart. Garrett earlier was showing you a daily chart of the S&P 500 cash index. You can't trade the cash index. So man had to create derivatives like futures and options and other ways to trade what the index is telling them. Don't let that confuse you too much, because the index chart and the futures chart, especially on weeklies and monthlies, will look pretty similar. But the chart that Garrett was showing you today, the S&P 500 actual cash index chart, that stops moving at 4 p.m. Eastern when stocks stop trading. And it doesn't start moving again until 9:30 a.m. Eastern the following day. But we know futures are still trading all through the night. The Asian Open, the London Open, right up to the Wall Street Open. So when you look, and you can do that on your TradingView chart, SPX, I believe is a symbol, you'll see a lot of gaps that you don't see on the futures charts. Now, we're in earnings season, so when the Globex markets reopened last couple days, I think we did have some gaps. It's rare to see a gap in the futures market because they trade around the clock. except on Sunday night. Market's been asleep for a day and a half, so on Sunday nights we will often see a gap. One thing to remember, with indices, gaps almost always fill, usually within a couple of hours, almost always within the same trading session, but it's not 100%. But a gap fill trade is what I consider one of the highest probability trade setups. Although we had a failed gap fill this morning on the NQ, got halfway through filling the gap and then burst. That's the truth about trading, okay? In Logic 247, I mentioned earlier, there's over 13,900 individual handcrafted alerts, all trend trades based on the 30-minute chart, price, and the 30-minute BBC. But over the last 247 weeks, we've averaged 20% or less of those alerts getting stopped out based on the risk profile I explained earlier. If you're new to trading or new to CFRN, if you're still seeking that holy grail that will prevent you from ever being stopped out again, please stop wasting your time and your money, your time and your treasure, okay? Now, treasure is a renewable resource. Time is not. Trying to find a holy grail in trading where you never get stopped out, it's like looking for a cat in the dark, a black cat in the dark that isn't even there. It simply cannot exist due to the laws of science and physics and even God. I'm not going to go into a long, detailed explanation today as to why that can't exist, but I assure you it can't. I'm not just saying it doesn't, nobody's figured it out yet. I'm saying it's not possible, okay? Professional traders know this. They waste no time on such foolishness. Now, it does make for great ad copy for people who are trying to sell you stuff. Never get stopped out again, or 98% win rate. That's just a bunch of hooey. And if you've been around any length of time, yeah, I'm not telling you anything new, okay? So, let's move on. All alerts are based on the 30-minute chart. The vertical line separates today, Friday, from last night, from yesterday, Thursday, okay? We had this candle go from zone to zone. This was the closing candle yesterday. This was the opening candle last night. So see, we had a pretty good gap. Market closed here, opened down here. Again, only in earnings season and only on Sunday nights will you typically see a gap in futures. And I'm going to guess somebody had a pretty huge miss last night for us to gap that much lower. Anyway, where did we gap to? The weekly zone, 4149/4150. Now, those are the zones that were published Monday morning at 6:15 a.m. Eastern. Once they're published, they don't change the entire week in any way. We've published the zone since December 14th of 2009. As you grow to understand how price behaves at a weekly zone, you will find zones to be one of the most important tools in your trading toolbox. Now, only 3 things happen at a zone. 70% of the time, it's going to be consolidation. That's what this is. 20% of the time, it's going to be rejection. See how price ran all the way up, okay, but then when the 30-minute candle closed, the only thing left touching the zone was wick. 10% of the time, the slice. Come across a good example, I'll show you. So we consolidated for, gosh, quite a few hours. The market opened last night at 6 p.m. 2 a.m. we actually dropped to the BBC, and while the pullback holds more often than not, we know eventually it's not going to hold. That's what keeps markets fluid. So now we're below the BBC. We have red and falling. So where's our target? At the zone below. I mean, once this candle right here closed at 41.45 down to 41.37, the zone, that's 8 points. $50 a point, $400 per contract traded. And the chart told you exactly what to do. If you're in a place where the charts are chaos or chaotic, they don't make sense, you need someone to teach you how to read the chart. Our goal is to help you become self-sufficient. We don't want you to go away. We want you to stick around, be a part of the family, be a part of the community, help the next new guy that comes along or lady, right? But we want you to learn how to read the chart like a newspaper, mystery novel, so that you don't need anybody to tell you when to get in or when to get out. You simply look at the chart. Start at the top. What's happening on the daily? Pretty bullish, right? Okay. Now, we got a big green candle on the daily. All right. You see that little wick down there? That was this. So where did price find support? At the zone. We consolidated a little bit. Red and falling finally turned to blue and climbing. We got back above the BBC. And then this candle here opened at 41.43. Ran up 6 points to the zone. 9 points. $450 per contract traded. You've earned the right to trade 10 contracts. That's $4,500. Now, price did slice through the zone right here on the 30-minute chart, like it's not like it wasn't even there. I mean, we saw how important it was here. But this guy, this is the 9:30 opening candle on Wall Street. Price just ripped through it. Now, what typically happens is when this move runs out of steam, price will retrace to the zone it sliced through and continue in the direction of the slice. Well, this is one of the times that didn't happen. There's very few absolutes in the world of trading, but there are a few. And the longer you're with us, you'll learn what those are. Okay, so price continued to climb. It ripped through this zone. It ripped through this zone. Now, this is what typically happens on a slice. When it runs out of steam, it retraces to the zone it sliced through and continues in the direction of the slice. So it didn't happen here, but it happened here. And we hit the target, 41.66. Once we got the bullish cross and price got above the zone, and maybe looking left, you wanted to clear all that, right? So maybe you take an entry at 41, I don't know, 56 to 41.66, the target. That's 10 points, $500 per contract traded. Then we hit the zone resistance, which sent us looking for support, which we found at the zone and then off we go again, putting in a slightly higher high, and now a retracement. Now this retracement's important because the black line is called the step line. And you see how on this move up, the separation that you had, price, step line, blue and climbing, BBC. That's what you want on a long trade. That's how you want them stacked. However, when the step line crosses blue and climbing from the left side to the right side, you should anticipate a pullback. In this case, it could just be a pullback to the BBC, but in most cases, it leads to a pullback to the BBC. So we'll have to be patient and see. If the market on this pullback finds support here and starts printing green, then on your smaller time frame, you can look for long opportunities. If price were to reverse right now and put in a new high of just 1 point or 2 points, I wouldn't trade it. Make it prove itself. And then on your smaller time frame, get a pullback to the BBC, up close, trade long, up to the most recent swing high. Okay? All right. Let's go to the Dow. Here's where the market opened last night. We had red and falling overhead. We opened right at the zone. Back to the zone. Remember, when price moves up to a zone, we expect resistance. Resistance. When it drops to a zone, we expect support. Got a little bit of a bounce. Then we continued down, and we didn't quite make it. So the zone is 33,735/740. So we missed it by a couple points. And we consolidate at the zone. Red and falling turns to blue and climbing. Strap in, getting ready to take off. And there we go. Bang. Right up to the zone, to the tick. Little pullback, another push takes us up to the zone overhead. And then we pull back to the zone. Now, I hope you're getting this. These zones were published Monday morning at 6:15 a.m. Eastern. All of our traders, our lifetime traders, our free trial members, all had these numbers Monday morning at 6:15 a.m. Eastern, and here it is Friday afternoon. They're still doing exactly what they were created to do, to show you where to expect potential support and resistance. And again, only three things can happen at a zone. So the step line is crossing. No surprise, we're getting a pullback. We should either find support here at the zone or at this zone, which by that time, BBC, if there's any sideways movement, the BBC will rise up to that zone. So that's what I call support times 2. Two good reasons for the market to find support in that area: the zone and the BBC. Question being, what if the market finds support here and starts printing a green candle? If that happens, then you'll have a window of opportunity over here, but you gotta wait, be patient, make sure you got solid footing and you're printing green. Okay? Then, as you approach this area, go to your smaller time frame, look for a pullback to the BBC, an up close, go long, grab your goal for the day, and end the week as a happy camper. Okay? Russell. Here's where the market opened. Now we opened below blue and climbing, and you notice how the step line here has already crossed, right? Yesterday afternoon, the step line crossed blue and climbing. So we expect to pull back to where? BBC. Got it. And we bounced the first time. The second time we traded through it. And price dropped right to the target, to the tick. 1742. So from 54 to 42, it's about $600 per contract traded. Now, once price got above the BBC and you had blue and climbing, wow. One candle took you all the way up to the zone. This candle opened at 1756, we'll call it. Ran up 11 points, $550 per contract traded. As a 2-contract trader, that's $1,000 plus move. That's not a bad living. In fact, it puts you in the, if you can make $1,000 a day, that's 2 points in the S&P or the Russell with 10 contracts. That's $1,000 a day, puts you in the top 3% of wage earners worldwide. Caveat. Don't start trading a bunch of contracts before you learn how to trade. When you put the cart before the horse, it's awkward for the cart and the horse. Okay? The blueprint's going to walk you through the process of putting together 10 consecutive days in a row in SIM before you get the green light to go live. When you go live, you'll go live with 1 contract. Now that you're trading real money, your goal is to increase your account balance by $2,000. Once that happens, the blueprint will notify you it's okay to add a second contract. You only add 1 at a time when the blueprint says it's time, and you only add with profit you earned in the market. So your first contract live is always going to be funded with your startup capital. But every contract after that you add will be funded profit you earn in the market if you have the self-discipline to follow the blueprint. You don't have to reinvent the wheel here, okay? From trade entry to trade management to trade exit to building a trading business, writing a business plan, writing a trading plan, all of that is available to our lifetime members. And our lifetime members have access to unlimited one-on-one mentoring. Plus you have around-the-clock support via Telegram. 9 out of 10 new traders will fail because they don't have someone to teach them how to do the job. Here, you have someone 2 hours a day teaching you exactly how to do the job. 9 out of 10 new traders don't know they need a business plan or a trading plan or even what the difference is. It's really kind of a shame because so many people lose so much money because trading has such a low barrier to entry. You don't have to pass a test. You don't have to be licensed. You got money, the market will take it. Okay? So be careful. Pace yourself. Don't expect to get rich overnight. Don't concern yourself with how much can I make. Focus on how much can I not lose as I learn how to earn. That's critical. Notice the step line has crossed and we're in a pullback. Okay. What would I do right here? Absolutely nothing. Not only are we in a pullback, the step line is potential resistance. This high is potential resistance. These highs are potential resistance. And blue and climbing is directly above price, and that's now resistance. They were running partners earlier, but that dynamic has changed. Over and over, again and again, day after day. Now, we drew in this little window of opportunity yesterday on the broadcast, and things worked out well. If you traded that, congrats. Here's the NQ. Here's the gap lower open last night. Consolidation at the zone. Pull back to the zone. More consolidation, hours. Then we get above the BBC. Red and falling turns to blue and climbing. And then bang, like a rocket ship. Right up to the target. And almost to the zone. And that is the highest weekly trading zone this week for the NQ. And we might, if buyers stay committed, we may close above the highest weekly zone for the NQ. Last week, we closed below the lowest weekly trading zone on crude oil. So we'll see what happens. What would I do here? Nothing. Because you've got potential resistance here, here, here. Now, if price were to punch through that zone and give a nice pullback and hold the pullback, sure, I would trade long, even though I'm above the highest weekly zone. What's more likely to happen, I think, as we run into this resistance, the step line is going to cross, price is going to retrace. That's not necessarily a forecast, but an observation. Crude oil. What do we got? Crude oil. We opened last night, things were pretty flat, and then we made a run up to the long target. Now, once we turned to blue and climbing, let's say you went from 74.90 to 75.30. It's $400 per contract traded. And price got below the BBC, blue and climbing turned to red and falling, and bang, we hit the short target. 74.70 to 74.35, $350 per contract traded. Get above the BBC, hit the target again, pull back to the BBC, hit the target again, another pullback that holds, hit the target again. This time we kept going. Ripped through that zone like it wasn't even there. We haven't quite reached this zone, but look what's happening. Step line is crossing blue and climbing. A pullback to this low, or the zone, or even the BBC is what's most likely in the cards. Not because I have some superior knowledge of the markets, but because that's what the chart is telling me is most likely to happen. 20% of the time, the market does not do the next high probability thing. That's why when I was talking about the logic alerts, 13,900 plus, yet 20% or less on average gets stopped out every week. Gold, market opened here, consolidated at the zone, drop to the target. Blue and climbing, turn to red and falling. So maybe you're end down around 94. That's $400 per contract to the target. Support sends the market looking for resistance, which it found at the BVC. Send it back down to the target. Now we got blue and climbing, so we need to start thinking about an up move. Once we're above the BVC, run up to the zone, consolidate, pull back to the BVC, and then we come just shy of the long target. We find 90 cents. Okay. Now, what's happening? Step line is crossing blue and climbing. Now, this isn't a very long distance. So this, I like this. The BVC is already at the zone. So that's support times 2. So I just need to see price drop to that area, hold, start printing green, and off we go. Remember, what we're teaching you is how to trade. We're not teaching you how to trade a specific market. Now, there's going to be people out there that'll tell you, well, you can't trade every market the same because they have different personalities. Okay, I stopped arguing that point long ago. But this is a market truth. Price flows the same across all markets and all time frames. Every futures contract, every individual stock, every crypto pair, every forex pair. Why is that? Because that's how markets work. Price flows from support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. So you don't have to outsmart the market, outfox the market, or beat the market. You simply have to truly understand what the market's trying to do and why. And then you simply do the same thing long enough to get your goal for the day, and then have the discipline to put the mouse away. Now, some people will preach more points. Here's how to get 10 points, 20 points, 30 points a day. Well, that's the hard way, man. Jack. Some days it simply isn't possible to take 10, 20, or 30 points out of the ES. But you know what is possible? Every trading day it's possible to take 2 points out of the S&P, or 10 ticks out of crude, or 10 ticks out of gold. Whatever amounts to $100 a contract. Every day, Jack. So, if you can live with $100 a day for 20 days, that's 1 month out of your life, you'll get the green light to add a second contract, which you will fund with profit you earned in the market. So now 2 points in the S&P is $200 when you add that second contract. When you add the third contract, it's $300. By the time you earn your way up to 10 contracts, those same 2 points, $1,000 a day, $250,000 a year, puts you in the top 3% of all wage earners worldwide. If it were easy, everybody would do it. There'd be nobody to pour your cocktail or your coffee or park your car. Everybody be making the big bucks as a trader. Trading's not easy, but it can be simple. And that's what we've been working on for many years. Going all the way back to 2005. Trying to make things as simple as we possibly can so that you don't have to try and learn everything there is to know about the markets. Nobody can do that. But what you can learn is how to reach your goal consistently on a daily basis. It's going to take patience, it's going to take self-discipline. You're going to have to show up for the training room or the workshop on Thursday night, and you're going to have to ask questions. You're going to have to book mentoring sessions. You have all these resources available once you become a lifetime member. And as a lifetime member, there's no recurring fees. There's no upsells. No nonsense. Our competitors say we shoot ourselves in the foot with that business model because we don't have recurring income. Well, that's their opinion, okay? We grew sick and tired of seeing people milked for every dime they had, so they had no money left to trade with. So we said, let's do something different. Let's do something right. Let's do something that when we lay down at night to go to sleep, we can sleep like a baby. Clear, clean conscience. Okie doke. Silver. We're in the N contract now. N as in Nancy. Price opened last night, consolidated at the zone. This is a great place to point out. No matter what market you trade, no matter what time frame you trade, the clock on the wall is always price. Yesterday we rolled to the N contract. Did that affect price? Look at all that consolidation at the zone. Apparently not. Then we come right down to the target. A 2-penny move is $100. Go from 25.08 down to 25. That's 8 pennies, $400 per contract traded. Support sends the market looking for resistance. Resistance sends the market looking for support. Then we get above the BBC, and we've not yet made it all the way to the long target. And because of the fact that the step line has crossed, we may not. Now, we could get a pullback, BBC, and catch a bounce that takes out these highs and takes us to the target. And I mean, it really looks like it wants to move higher right here, right now. Could you trade 25.32 to 34? Yeah. But if you look around, there's probably better opportunities. Remember, we trade every market exactly the same. We're not concerned about the personality. We just want, all I need on any day is one high probability, low risk trade setup. That's it. And that's all you need too. Last one, euro. Where'd we open? Right here. Resistance at the zone. Price gets below the BBC and we get support at the zone. Consolidate, and then price runs up to touch the zone overhead. Resistance, which sends us looking for support, which we found at the target, or this previous swing low. And we bounce, come back down, hit the target, trade through the target, hit the zone. bounce, hit the zone again, spike, touch this zone. The zone is 910/915. The low was 930, so yeah, we didn't quite touch it. But then here we go. Resistance at the zone. Pull back to the BBC. Pull back holds more often than not. Takes us right up to the next zone. And then some. Now, step line has crossed. So like most of the markets, we are in pullback mode. Now, I know people ask and wonder, okay, well, if you're convinced because of that cross there, price is going to pull back to the BBC, why don't you just short it? Well, let me just be honest with you. I do sometimes take counter trend trades, but I don't teach them. I don't put them in the Logic 247 channel because they do not have the same high probability, low risk nature as a trend trade. Counter trend trading is kind of like being a salmon swimming upstream. Okay? They do it, but man, it's a lot of work. Okay? Of the 13,900 plus alerts in the Logic 247 channel, every one is a trend trade as defined by the 30-minute chart, price, and the BBC. So if price were to pull back to the BBC and find support, then I very well might put out an alert in the Logic channel, a trend trade, because we've got a leg or retracement, a leg or retracement, and so another leg, that would be a trend trade. Okay. Now again, once you have experience trading with the trend, and you can't remember the last time you didn't get your points, you should probably just stick with what you're doing. But only then should you really entertain counter trend trading. Okay? Now, some people, that's what they specialize in. Just like some people specialize in trading the news. We don't trade the news, and we don't promote counter trend trading. But we've always said we would be transparent with you, so I don't want to stand before you and say I never take a counter trend trade, because yes, sometimes I do. But that's a story for another day, or a one-on-one mentoring session. If you've never taken your free trial, go to mytradingiq.com. Let us get your indicators and charts set up over the weekend, so you'll be ready to hit the ground running with us Sunday night at 6 p.m. Eastern when the market's open. You've already had your trial. You only get one. Now you got to make a decision. Do I want to be here, or do I want to at least have a shot at being here? 9 out of 10 new traders do not have anyone to teach them how to do the job. They read through these forums and these chat rooms, and, well, you've been there. I probably don't need to tell you. Now, just because you're a passport holder doesn't guarantee you're going to be the 1 out of 10. We're going to provide you with the knowledge and the tools to do the job. But what you do with that knowledge and what you do with those tools, we have no control over. Maybe you're unable to be patient or exercise self-discipline. And book a session and tell me that's your problem. And I'll work with you on that. I'll do my best to help you with that. I know, the markets look so complicated, but hey, folks, it's not rocket science. The market's moving higher, get long at the right spot. Get your goal for the day. Be done. If the market's dropping, get short at the right spot. Get your goal for the day. Put the mouse away. I know that sounds oversimplified, but don't get me wrong. Trading's not easy. Never has been, never will be. It can be simple if you stick to the rules, if you follow the blueprint. Along with having a living, breathing teacher 2 hours every day in an interactive environment, you have unlimited one-on-one private mentoring. The strategy we teach you and the indicators you own for life are fluid across all markets and time frames. Futures, stocks, crypto, forex. As a passport holder, you get the Logic 247 alerts around the clock. You get the Concierge Trade Alert report every evening as soon as it's published. You're able to attend the members-only workshop on Thursday night. And for those of you that missed last night's workshop, those of you that are members, you have access to watch it in the Telegram channel. We've got a lot of Telegram channels, but we have one specifically dedicated to the Thursday night members-only workshops. So if you're a member and you missed it, you can go there and not only watch last night, but last week and the week before that, and etc. Everything a trader needs, all under one roof, one low price. EMiniFuturesTrading.com. Couple mouse clicks is all it takes. If you have questions, call 949-42-EMINI. We have operators standing by to take your call. Valerie will call you back if she's not there to answer the phone. Or send an email to support@cfrn.net. Now, again, Friday is a great day to start your trial. Doesn't mean you're going to lose one of your days. It means we'll be able to get you all set up over the weekend before the markets open Sunday night, and then you'll have all next week, Monday through Friday. And then next Friday at this time, you'll be able to make a well-informed decision as to whether or not you have what it takes to become a trader, and if the way we trade is right for you. It's the only way to find out, and there's no credit card required. We invest our time, our energy, our resources in you before you ever have to spend a dime. Let's wrap the week up with our good word for the day. Last couple days, we've been talking about setting the captives free. And I don't think that means what Newsom wants to do or Alan Bragg, just let everybody out of jail. It's got a little different meaning, but that's my shot at humor. Today, our topic, he will do it again. Genesis 35:14. Jacob set up a memorial stone in the place where he had spoken with him. Him being God. There are events in all our lives that, looking back, had to be the hand of God at work. Maybe you bumped into somebody who introduced you to your spouse. That's what happened to me. One of the guys on my ship. He was like, dude, I met this girl last night. You gotta meet her. You're gonna fall in love with her. And I did. And now I'm telling you this story 40 years later. So maybe you bumped into somebody who introduced you to your spouse, or a coworker resigned and suddenly you were promoted, or a stranger said something that spoke to your heart. These are all signs of God's favor. And when you're tempted to get down, you need to remember how God opened the door for you, how He made a way, or spared your life, or healed your child. There's no such thing as coincidence. When something good happens, recognize that it's God and recall it often. In the Old Testament, Jacob set up a memorial stone in the place where he had spoken with him. Have you established any memorial stones lately? A sure way to build your faith is to remember all the times God made a way when every door was locked and barred against you. You know what? Next time you're at the dollar store, pick up a journal. Name it my Memorial Stone Journal. So every time God does something in your life that is absolutely mind-blowing, there's absolutely no way that could have happened were it not for God's favor on your life. Write it down. Every time. Write it down. And on those days when the enemy comes calling and wants to come in for a cup of tea, tell you how much your life sucks, you can get out your Memorial Stone Journal and tell him he's a liar. I got evidence. He will soon depart. Pray for your neighbor, because just because you shut him out doesn't mean he's going to stop wandering around like a roaring lion seeking who he can devour. Okay? When the enemy comes knocking, don't invite him in for tea. A sure way to build your faith is to remember all the times God made a way when your natural eyes said there is no way. Days when you were lonely and God brought the right person into your life. Nights when you felt so bad you didn't think you could make it until the next morning. Suddenly, out of nowhere, God turned things around and gave you the oil of joy for mourning, lifted you out of the pit, gave you a new beginning, and today you're happy, healthy, and whole. Best of all, if He did it before, He'll do it again. He is the same today as He was yesterday. And when you take time to remember His goodness and faithfulness, it strengthens you to keep fighting the good fight of faith. That's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.